listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. We're joined by Ryan Craver. He's a retail expert and the Senior Vice President of Emerging Brands and Digital at Lamour Group. Ryan, thanks for joining us on this Thursday morning. How are you doing today?
Fantastic. Thanks for having me again, Brianna.
Absolutely. Well, we got some retail figures out earlier this week. Do you want to share your take on those with us really quick?
Sure. I know the last time we spoke, we saw a pretty strong May sales headline number at 2.7% year-over-year improvement. I think that June came in a little light, and the market obviously responded accordingly against those retail names. But I think there's a couple of takeaways. The first thing is that we continue to see the big ticket items as the purchases that are driving the sales. You still see the auto sector doing very, very well. It was up 6.5%. You still see furniture and home furniture stores doing very, very well. They were up about 4%. And then you still see the weakness that we've seen previously. General merch was down. The gasoline was obviously down considerably and continues to be so a drag for many, many retailers. And then department stores were down. So I think, yes, they missed expectations. However, it's still up year over year, 1.4%. That keeps the overall 6-month rolling above 2% year over year. So it's not as dire as anticipated. I think, again, we're going into a big back-to-school season. So I wouldn't be surprised if we see some positive revisions to the June numbers, and we see a strong July.
Let's talk about some of these specific retailers. Macys got quite a bit of attention yesterday. Activist investor Starboard Value mentioned that it acquired a stake in saying that it felt the department store chain stock would be worth $125 if it better capitalized on its real estate. According to Starboard's analysis, it's saying that $21 billion of the company's $29 billion enterprise value is in its real estate. What's your long and short-term outlook for Macys right now?
Yeah, what a conference yesterday, not only for Macys,
Right?
but for a bunch of others. It's fantastic with Carl Icahn and Larry Fink debating back and forth.
Mm-hmm.
So for Macys specifically, I think that they're being cast as a real estate investment trust. If you look at the various retailers of today, there's two ways in which majority of them wake up every morning. Some wake up as true retailers and they focus on running stores and digital properties, and others are looking to create value by identifying what the value of their real estate is.
Mm-hmm.
Macys, to me, still sits in a place where they are true retailers and they just want to sell product within their stores. They like to own their real estate. I think the activist shareholder is definitely going to help drive some additional liquidation of real estate holdings that they aren't happy with, but they've very clearly articulated what their strategy is. They will continue to focus on becoming an omni-channel retailer. They will divest properties or they will liquidate properties as they see fit. And then number three is they're going to spend their money where they think that they can pick up specialty retail market share, like the Blue Mercury purchase. So it may create a little excitement in the short term. I just don't see them coming back to the market and saying, we're going to spin off the New York City location or any major properties. They like owning their real estate. They like having the control. You counter that with what's driving a lot of this thought, and it's retailers like Sears. It's retailers like Hudson's Bay Company. And I think they're very, very different in the mindset of what Macys has come out and said their overall strategy is.
That's a great point. I know that's exactly the other company we were talking about in relation to this news was Sears, which did do the REIT spinoff, and it's just been kind of a wild ride for Sears since then. Another stock that you and I were talking about before we got live on the show was Amazon. What a great day to have you on the show as well, because it seems like this Prime Day that they had yesterday was a little bit of a flop. Did you see any of the action that was happening with that?
Yeah. So what a day yesterday with both the
Right.
Alpha Conference and Prime Day. As I've said before, I'm a huge fan of Amazon, not only as a consumer, but also as a digital property that helps our brands sell a lot of product. I think the last time we spoke, they were at about 430, and they're obviously up from there. What we saw from our specific brands yesterday from Prime was the highest sales number across all brands that we've seen in all of 2015.
Really?
When you compare that to an average July day of last year, we were up anywhere from 150 to 270-ish%
Oh, wow.
year over year on that exact day. So I think that there was a lot of skeptics. There was a lot of feedback that it didn't go that well in terms of what they offered. They obviously tried to offer as much as they could. The big name products came from Amazon Direct, like the electronics, and those kind of drove a lot of the negative comments that were shared. But with that said, they did a huge job of marketing it, especially in the U.S. and in Canada. I can't speak on the U.K., and I think they drove a lot of traffic, and we saw a lot of sales, so they drove a lot of excitement. I think what they're trying to do, obviously longer term, is replicate what some of the Chinese players like Alibaba and others have created in driving promotional sales at the middle of the year. And if they can continue this year over year over year, and there's a Prime Day, I think they've pulled something off that's actually brilliant, and it's something that's great. The number one point that I saw from everyone is that they were not making any money through Prime because they were heavily discounted. But if you start to remember that 40+% of what they sold or sell on a daily basis is from third-party sellers, they're just making the margin. So essentially, they didn't fund any of the markdowns or the discounts. Mm-hmm. Who funded those? The brands that sell on their site. So great job, and I hope to see them do this again next year.
Hey, that's a great take to bring on that. What about Walmart, though? I'm pretty sure I read that they tried to do some sort of competitive online sale to Prime Day.
Yeah, so Walmart definitely has come out very loud and proud and said that they're going to fight this Amazon beast. Target did not come out and say that they were going to fight the Prime Day specifically, but they had to respond, and they responded by dropping their free shipping threshold down from $50 to $35. I think just they were responding to Prime Day. They weren't necessarily ready. And I think that the marketing behind the Walmart Prime Day really wasn't there. So they may have done well, and they may have seen some halo effect from Amazon's Prime Day, but I don't think they did nearly as well as Amazon just because they were the first mover and they put a lot of marketing into it.
What about some of our other online retailers? I know Alibaba has kind of been going through some issues with fraudulent products on their service. Have you been following Alibaba lately?
Yeah, I the last time we spoke, I was very, very bullish on Alibaba, and I still am. When we last spoke, it was at about 86. We're probably at about 81 now. Mm-hmm. I think they are still, like I said before, a behemoth. If you're doing business in China, you have to deal with them, or you have to deal with JD.com. I think their earnings on 8/12 might surprise a few people. I still think that they are a great stock to own for the longer term. Yes, we've seen a lot of issues with things like fraudulent products, but if you go back to the days of eBay, to Craigslist, and to all the others, all these types of marketplaces deal with this. It's part of their maturation process, and they eventually work to combat it in some way, shape, or form. And longer term, they know that it's inevitable that they're always going to have some sort of counterfeit products. You sit back, you look at Alibaba at its core. It's a huge corporation that carries no inventory and is just used as a platform to sell product. And that's just a great place to be in because they never have to hold inventory, and they
Yeah,
have very, very
absolutely.
rich margins.
Let's talk about one of its forebears, eBay. They did report earnings this morning, and then they're also spinning off PayPal. First of all, do you think eBay is going to have as much value after it spins off its PayPal services? And then, what's your overall take on eBay?
Yeah, great question. I think eBay has been masquerading as a PayPal value for quite some time. It's it's everything that's been holding that stock up for quite some time. Longer term, I'm not as bullish on eBay. I am incredibly bullish on PayPal. I think the issue that eBay has is you've got a customer who has become accustomed to shopping on a price point that just sticks or is a savings-based price point like an Amazon. They're no longer interested in the auction format.
Mm-hmm.
They may be interested in some auction format buying, but overwhelmingly, Amazon's stealing the sellers from eBay, and they've got a much better way in which they sell product. I think eBay realizes this, and over the course of time, they've started to build more and more brands and try and have fixed auctions. But it's a way in which a lot of people don't like to shop. And I think it's not a very rosy picture for them. They're having struggles internationally, and I can't see how they're going to get their way out of this mess unless they dramatically change the way in which they sell their product.
Let's shift focus to some more of our traditional retailers. You mentioned Kohls. You're following this one. What are you seeing in Kohls?
Kohls, the last time we spoke, I think they were around 62. They're probably at 64. I think they are one of the better performing department stores. I think they have an incredibly loyal customer base. I think they very clearly have articulated their strategy of what they're going after in terms of digital. And I think, to be honest, they are, if you're going to own someone within the department store space, it's them or it's JW Nordstrom.
Oh, that's an interesting point. I think we saw Nordstrom even have a sympathy play off of that Macy's move yesterday. What about Costco? What do you see in Costco? We've talked about that before.
Yeah, Costco, last time we spoke, I think I called it a gift at these prices. It was at 139 then. It's probably, let's see, it's slightly up from there. If you look at that whole warehouse space, they continue to steal market share from Sam's Club. Sam's Club continues to post negative comp sales versus Costco, even when you exclude the fuel impact. If you look at the latest June sales from Costco, they were 6 and 7% internationally when you exclude the fuel impact. They're still doing very, very well. And they're obviously trading at a bit of a forward premium. However, they've got that huge moat of all those membership fees that consistently will be there year over year. And, next year they've got this big Amex to Visa change that I believe happens in April. So I think if you're going to own within the warehouse space, you got to own Costco.
Some others that I've been talking to lately have mentioned that they've been taking a look at discount retailers, things like TJ Maxx, Ross Stores. Have those popped up on your radar at all?
Yeah, all of those are pretty big names today. They've obviously done very, very well stock market wise. I think at some point there's probably going to be too much discount. If you saw recently, J. Crew announced that they're getting into discount or outlet through a new brand called Mercantile. Kohls has announced that they're getting into it. Macy's has announced that they're getting into it. There's not enough. There's not enough of a market to continue to grow at this pace. Short term, I still think that they will run for quite some time because they are the hot play right now. Longer term, I think that there's going to need to be some sort of consolidation. But uh, there's almost too much excitement within that space today, in my view.
Hey, that's a great point. There's only so much that you can fit in that kind of sector. We're on the line with Ryan Craver. He's a retail expert and the Senior Vice President of Emerging Brands and Digital at Lamour Group. Ryan, we've only got a few minutes left with you, so let's talk tech stocks. Facebook. I know we usually cover a couple of tech stocks with you when you come on the show. So, what are your thoughts on Facebook right now?
Facebook, huge believer. Last time we spoke, I think it was around 81, so it's done quite well. I continue to be a huge believer in them. I still think that they have the best strategy to not only empower small and medium-sized businesses to spend digitally, but they also have the ability with their changes to click model for marketing to drive the average revenue per user way, way up. They are in the messaging space, which is extremely hot. They continue to have the largest social network. I just think that they will continue to do very, very well, and the premium is actually justified.
One last one for you, Ryan. Twitter. They had the botched earnings last quarter. Of course, CEO Dick Costolo sat down. Jack Dorsey's now at the head, but he's also the CEO of another company. Everyone I talk to on this is like they feel very strongly either one way or the other. They're either super bullish, like, hey, they're gonna figure out this revenue situation, or they're just like, nope, I don't believe in it at all. Are you a Twitter believer?
Unfortunately, I double question myself all the time about Twitter because
I think we all
love it.
do.
Personally, I love it.
Right.
Um, I still sit here and I say, is there any other platform like it? And there really isn't. There really is no other platform in which people across the world, whether they're normal people like myself or they are celebrities, go to a platform to share in the way in which they do and engage on various topics. I think they've got something incredibly special. I still think there's plenty of room for them to grow the average revenue per user. I think they're going through some current issues. I remember last time I said that 35 was a support level. It broke that support level, but it's back above that support level with some of the fake rumors that came out on Bloomberg. So longer term, I am still a big believer. I don't currently own it. I'm kind of on the wait and see what ends up happening because I think longer term Jack Dorsey is not the answer. But they definitely got a few guys like Anthony Noto that are running the ship today that I do believe in.
We've been on the line with Ryan Craver. He's a retail expert and senior vice president of emerging brands and digital at Lamour Group. Ryan, thank you so much for joining us on the show today. It's such a pleasure to have you.
Fantastic. Thank you for your time, and I look forward to next month.
All right.